beverages are ready, we're ready for our last presentation, Microsoft.
So, well, good evening. We are Team C, and we will be pitching Microsoft today. So to give you a little bit of an overview about our company, Microsoft is a global technology conglomerate with a mission to empower every person and organization on the planet to achieve more. They are able to accomplish this through their 3 business segments. So first off, productivity and business processes. This includes their products such as Microsoft Office 365, Dynamics, and LinkedIn. This brings 32% of their total revenue, which is gained primarily through subscriptions, but also some ad revenue with that. Their second segment is their intelligent cloud. This is their up and coming with their Azure cloud-based platform. Overall, 43% of their total revenue. So this definitely is one that is surging forward. And then finally, rounding out that last 25% is their more personal computing segment. This includes their Windows PCs, their Xbox gaming, and some web browsers. So with this, it goes a lot longer way than just their products. For that, it brings a lot of awareness to the company as they are establishing themselves for their future. So that it goes into for them gaining contracts with governments as well as businesses, from everywhere from large corporations to small businesses and the personal user. That is all due to the versatility of all of their products, and they're a company that can pretty much do it all and support everything that a business might need. So that gives us a foundation as we move into our financials.
So Microsoft has done, over the past decade, they have shown that they are extremely strong, and they generate their revenues really well, and they've been able to grow extremely well. They have a 14% 5-year revenue compound annual growth rate, and they operate a net margin of 35%. All 3 of their business segments from 23 to 24 have grown at least 12% in revenue, with their intelligent cloud being their standout at 19% year over year. And they also, all these business segments operate at high margins, which allows them to take the money that they make from these businesses and invest in making them more efficient, making them more profitable, they can just reinvest it back in the company. And then so they've also built themselves a rock solid balance sheet. They have a debt to asset ratio of 0.43 and a quick ratio of 1.3, which shows that they cover their investments well and their liabilities well. They also have shown their ability to generate nice returns on the money that they invest and the money that they're given. That's shown through their return on invested capital of 28% and their return on equity of 37%. And also, one thing that I wanted to highlight on this slide is their capital expenditures and free cash flow have grown side by side over the past couple years, and that is due to Microsoft being able to invest in the right areas for their business and to make those investments go a long way. So they've been able to, while ramping up capital expenditures, still put away cash every quarter and every year to invest in things that they might feel are going to be productive for their business. Also, they do pay a small dividend. It is marginal at less than 1%. That's because they prefer to do buybacks as their way to give wealth back to their shareholders. They've done over 100 billion in buybacks over the past 5 years, and those have slowed down over the past year and a couple quarters, but that is because they have promised heavy investments into AI, so they feel like that is a better way for them to distribute wealth back to their shareholders farther down the line than to do buybacks at the current moment.
Yeah, now going into the sector overview, Microsoft's in the information technology sector, and this sector is rapidly growing due to companies' investments in OpenAI, cloud computing, and database solutions. And this industry is expected a market size growth from 8.9 billion to 9.6 billion in 2025, reflecting a compound annual growth rate of 7.7%. Looking into the next couple of years, we should see this industry have a market size of around 13 billion, reflecting a compound annual growth rate of 8.2%. Now looking into Microsoft's main revenue stream, cloud computing, Microsoft brought in around 25 billion in US revenue in Q4 within the US, and this market within the industry is expected to grow with a compound annual growth rate of around 20% over the next couple of years. Now going into the competitive analysis, the 4 competitors that we have selected are Amazon, IBM, Google, and Oracle. To kind of break down the competitors, IBM and Oracle offer business software database solutions that rival Microsoft's enterprise offerings like Office 365. And then to kind of break down all the competitors together within cloud computing, IBM and Oracle are kind of niche in this market, but the main three are Microsoft, Google, and Amazon, with Amazon's AWS and Google's Google Cloud that rival Microsoft's Azure within the cloud services market. Looking at this table, we can see that Microsoft is the more powerful and more diversified company within the sector, starting with their market cap at $2.6 trillion, cementing themselves as one of the most valuable companies in the world. Going into their margins, as you can see, they're way ahead of their competition, showing that they're more proficient in turning their revenue into profit. And then their current ratio at 1.35, which is a healthy number, as we can see that Google does have a higher of 8.4. Microsoft compensates that with their massive free cash flow of around $70 billion, and then rounded out with their debt-to-equity ratio at 0.14, showing that they keep up with their debt and pay that off at a constant rate. With this industry rapidly growing with AI and cloud computing, with Microsoft's integration in Copilot, AI, and cloud computing, and their strong financial performance, they put themselves in the intersection of this rapidly growing industry.
We will now move on to our investment thesis. I will be covering three main points, with the first being the financial stability and strong core business of Microsoft. So as mentioned, Microsoft has three revenue streams that are broken up in three different segments, and the revenue streams have seen significant growth over the past couple of quarters. Their strong competitive advantage over their competitors lies within their high barrier of entry. So they've been spending the past decade building up their products such as Excel, building relationships with their consumers, and maintaining the retention rate of their consumers with their products. And then finally, as mentioned, there is roughly $75 billion in free cash flow. So they have used that to pay a little bit of dividends and stock buybacks. But as I will mention or discuss in the next slide, they are planning on using some of that free cash flow to bolster their AI infrastructure. So next, their strong foothold in the cloud computing industry, which is rapidly growing. Right now, the cloud computing market is valued at around $750 billion and is projected to grow to roughly $1 trillion by 2030. Microsoft currently has a market share of 20%, and that is second to Amazon at 31%. Azure and cloud services have seen steady growth in the past couple of quarters, with 30% year-over-year revenue in their past 5 quarters. And then finally, as I mentioned, they released a statement saying that they plan on spending $80 billion on data centers to handle their AI and speed up their processing time. And then finally, the discounted price with the recent volatility in the stock, we feel presents a good opportunity for a buy. With the recent release of the DeepSeek AI, the stock saw a price drop of around 6 to 7%, and then with the recent announcement of the tariffs, an additional 4 to 6%. We feel that the volatility of the stock price does not accurately reflect the financials of Microsoft. We feel that for over the past decade, Microsoft has been steadily progressing in their various sectors, and they have positioned themselves for continued growth in the future.
Now moving on to the next slide, I want to look at our valuation methods. First, starting with our Monte Carlo simulation. What this is a statistical model that takes the previous 252 trading day closing prices of Microsoft Corporation, finds a mean and standard deviation, and then 10,000 different times it projects out over the next 252 trading days closing prices. And with that, we take an average 1-year statistical price target of $428. Now, through our extensive research, we are able to find multiple analyst ratings, with us taking an average of those being $502 intrinsically. And finally, we took a modified DCF model, allowing us to find an intrinsic value of $408. With Microsoft currently trading at $354, we believe it to be at a very extreme discount and incentivizing a good return for investors. Now, to break down our discounted cash flow model a little bit more, I want to highlight a few key points. First, their cost of equity being 9.59% and their cost of debt being 0.29%. This allowed us to find our discount rate, or their weighted average cost of capital, to be 9.3%. Secondly, our modified DCF takes 2 different terminal values, one being a standard perpetual growth model, and the second being an EV to EBITDA multiple exit method in year 5. Now, with their perpetual growth, we chose it to be at 3%, as though Microsoft may be a mature company, they're at the forefront of innovation for an industry that's rapidly growing, that being AI and cloud computing, allowing their margins to grow excessively over the past few years. Secondly, for our EV to EBITDA multiple, we took industry average between their competitors and other companies within the information technology sector to find a 19.7 times EV to EBITDA multiple. With this, we were able to determine our terminal values between our perpetual growth and our EV to EBITDA multiple, taking a 50-50 split to find 3.6 billion being our average terminal value. With this, we were able to determine their enterprise value to the current day after discounting it back, and then determining their equity value, or their equity value of today, and then dividing it by their shares outstanding to find our intrinsic value of $408. Finally, for our last slide, I just want to go back over our investment thesis. Microsoft is a very strong company financially. Even in times of recessionary periods or economic downturns, they're able to not only just grow their margins, but be able to grow their profitability year over year. Secondly, they're at the forefront of innovation for a market that's ever expanding, that being AI and cloud computing. And they've set themselves up to capitalize on such a growing market rapidly. And then finally, with a market driven by consumer sentiment, we believe that Microsoft is currently trading at a very discounted price, providing a very incentivized return for investors, which is why we recommend a buy of Microsoft Corporation with a long-term hold, with a current market value of $354 and an intrinsic upside of 28%, with that being $455. Thank you.
So, okay. No. So when they say like cloud computing something is $1 trillion, what? $1 trillion of what? You know, is it revenues or capital expenditures or? Go back
So, you can go back to the side. It's
size of the
talking
market.
about
There it is, you just passed it. There it is.
this one.
Yeah, the second bullet, the first bullet point under 2. When
So that is the total revenue of that business segment. So their total.
No. The question is over to the left, and it says the cloud computing industry is forecasted to grow to $1 trillion. Of what?
So I think that's the total addressable market. So the total addressable market for the cloud computing industry is going to be over $1 trillion.
Is that revenues a year?
It would be revenues for the service. Yeah.
Okay. Thank you.
So they have like platform as a service, software as a service, and infrastructure as a service. So are the 3 different segments of like the intelligent cloud like box of like the sector. They operate in the platform as a service segment of that. So their total addressable market won't be a total of $1 trillion. I think it's closer to like 400 billion for that segment of it. But
So help me understand why I should buy this.
why you should buy Microsoft?
And I'm going to put this in the context. I mean, is this because the stock is cheap? Is it because revenue is going to accelerate? Is it because they're going to take market share? I mean, give me
Yes.
from.
I think all of those are a yes. So I think so Microsoft in general, I think, is positioned so well as a company. Their financials are so strong that they've already expressed, Satya Nadella has already expressed that AI is where they really see the most of their growth coming from. And it's what they're investing in heavily right now. So I think with their investments into AI, they're not only going to reap the benefits of like data processing with Azure, but they're also going to be able to transition people from, it's going to help all aspects of their business. So it's going to help people that are using Office 365. It's going to make all of their lives more efficient. It's going to be able to project, like, it's going to know what you're trying to do.
Okay, so is revenue going to go from 3% year on year, 5% year on year, 5% to 10%?
So
Margins going to expand? How?
So I think with their investments into AI, not only are their margins going to expand with like that segment of their business, but I also think it's going to help to make all of their businesses more efficient. They're going to be able to reap the benefits of the progress of AI, not only in their manufacturing, but in all of their other segments. Like Office 365 is something that most people use every day, and with the cloud services that they're going to be able to use with Azure, it's only going to help them. I think it's going to help boost the retention rate because they're going to be a one-stop shop basically for businesses. If they want to store their data somewhere, they can. And like Ivan said, they've been doing this for 15 years. A lot of the consumer trust that they have is not something that you can buy. So even if places like Google or Amazon have the capital to build these data centers, which is it's a high barrier of entry into that market in general, because of how capital intensive it is to build data centers. But I think over time, Microsoft is a better run company, and I trust Satya Nadella, and I think that the work that they've done in building that consumer trust is something that isn't, that can't be discredited, and it's something that I don't think their competitors have.
And honestly, if I could add on to that point, because another part that you asked is if it's also because of the discounted stock. Obviously, I feel like there's two ways that people primarily look at the market. It's one, fundamentally, which is everything that we explained today, but also technically. It's very psychological, and especially in today's political era that we are in, tariffs have caused such a scare that investors have begun to leave the market. And stocks such as this, that while fundamentally look amazing and should definitely have a higher stock price, are currently trending on a downward turn because people are scared of the uncertainty of tomorrow, because no one knows what's going to happen. And we believe that it's just a really great time for investors to get in at a low point and allow themselves to enjoy a return, especially with their dividend too. And while marginal, their stock price makes up for that, allowing it to still be about $3 per share.
What are the risks in Microsoft?
Risks?
Yeah.
Do we want to go through the slide for that?
We can if you want to go to this slide, like I don't know if we have just an exact one for just risks, but I think some of the risks would be data breaches, which have actually, while attacks on data breaches have gone up exponentially over the past 5 years. Microsoft's data breaches, they get to a shorter point in the data breach process. I'm sorry if I don't explain this perfectly, but there's like a point in the data breach process that allows it to get to certain things. And the amount of attacks that have gotten to that point is actually going down. And that's something that Microsoft is trying to be on top of, is their data breaches. And it's something that places like the EU, and a lot of places in Europe are already cracking down on, so they're trying to get ahead of it. Companies like Meta and Apple have kind of gotten stuck in the teeth of the EU's litigation process. Microsoft isn't yet, because they are good patrons with data. I also think innovation is something that is a risk for Microsoft. If they don't continue to innovate, they are going to lose their foothold in AI. But that is not the direction that Satya Nadella is trying to take. They are throwing all their money that they can financially put into AI. They are betting on it, and I think it's a good bet. And also, like I said, they have so much capital that it's kind of hard for them to get priced out of anything. They make so much money that if they want to invest in something, they can without worrying about it bankrupting them. Companies like Oracle and IBM that don't operate at as high margins aren't going to be able to compete. Honestly, I think the whole sector that Amazon, Google, and Microsoft are in right now, which is cloud processing, I think it'll probably be them three at the top, because I don't think anybody else is going to be able to keep up with their investments. So I think it's really a race to be in the top three. I think Microsoft will come out on top of that.
Time.
Yes.